All right, good morning, guys, and happy hump day. We'll jump in here. We'll get things started for the pre-market prep on Wednesday, July 27th. So hope you all are doing well. Hope you had a good morning. Hopefully you've taken your dog for a walk already. If not, make sure you do later. But we'll jump in here, guys. So some earnings last night. A couple of the big companies, they tell me. Google. So Google got earnings last night, and we're going to open up around 108. So for now, Google avoids the earnings destruction. We also heard from Microsoft last night, and Microsoft is going to open up around 260. So nice $10 move there for Microsoft. So far, guys, a couple of the big tech earnings here. Things looking pretty good. Keep in mind, we got Amazon this week. On the 28th, we got Apple on the 28th. So it shall not be dull. But so far, so good. And the futures this morning, the QQQ up about 1.5%. And you got your S&P futures up about 1%. So a pretty good dip yesterday, guys. But for context, kind of a normal dip. All right, they trapped the shorts, they squeezed the shorts, they ripped the market. That kind of strength, that's a really impressive move. That kind of strength not always going to be sustainable. Meaning at some point you're going to get your dip. Right? You're going to get that first back test of that daily 21 EMA. The key, of course, guys, is whether or not that first dip to the 21 EMA actually finds support, or whether or not we just break down. It's been a bit more of trap the shorts, squeeze the shorts, rope in the bulls, and then flush the market. Trap the shorts, squeeze the shorts, rope in the bulls, flush the market. Over and over and over again. So if we're going to get any kind of, sustainable rally here, really, really important that the S&Ps and the QQQ, pretty much everything, the S&Ps, the Qs, the IWM, the semiconductors, the technology sector. Really, really important, guys, if these things hold support at the daily 21 EMA. So for now, yesterday's dip strikes me as pretty normal. And the great thing about the dip to that 21 EMA, if we can actually hold here, we should start to see over the next couple of days, my favorite trade popping up. And the favorite trade, guys, is a pretty simple one. Find something trading above that daily 21 EMA, not too far above it, ideally right on top of it. And then on top of that daily 21 EMA, we're looking for that moment in time where we have a squeeze and a buy signal on a lower time frame. That's been the theme of all of our bullish trades as of late. 30-minute squeeze in Zoom, 30-minute big three buy signal right above your daily 21 EMA. We're in and we're out. Our trade from last week in Coinbase, same exact thing. Right above that daily 21. Then we get our buy signals on the 15-minute and the 5-minute. So the thing about those lower time frame buy signals is, right on top of that daily 21, we can sneak in here, guys. We can use that as a quote-unquote early entry that could trigger the push all the way towards +2 on the daily chart. Right, so for Coinbase, a good example of that. We're jumping in right here, right on top of that daily 21, and you got your 15-minute, your 30-minute buy signals. That takes you all the way towards +2. Trade that we had last week in the QQQ, same exact thing. Right near that daily 21, we had our moment in time on the 5-minute chart. So we'll take them wherever we can get them, just trying to follow the pretty colors. But for the Qs here, oh, come on, 5-minute chart. I don't got enough data on the 5-minute, but right over there had a pretty 5-minute squeeze. So 5-minute squeeze, 5-minute buy signal, right on top of your daily 21, takes you all the way towards +2. So huge differences, guys. Really, really big differences between that 30-minute squeeze, that 15-minute squeeze, that 5-minute buy signal, right on top of your daily 21. Really, really big difference between that trade. And then the 30-minute squeeze up here, closer to +2 ATR on your daily chart. That's the trade I'm looking for. Right? I want to take that 5-minute, 15-minute, 30-minute hourly signal, plant my seed, and then try to catch that push from the daily 21 EMA all the way up there towards +2. That's what you got out of Tesla. 30-minute squeeze did its job. The 30-minute squeezes up here, Right? Those lower time frame entries up here, a little bit different, guys. Much different context. Back here, Tesla's not fighting this growing probability that we got to pull back to the 21 EMA. Right? We're on top of the launching pad. Up here around 830, 840, right around +2 ATR. Now we got that growing probability that eventually we're going to pull back. So really big differences. Amazon yesterday, nice hourly squeeze, nice hourly buy signals. We're a little bit too far above that daily 21. So that's where these lower time frame trades have a better probability of, failing and going against you. Where if we can find them back here at the mean, much better probability that they work in your favor. So here's the scoop, guys. Right, got your S&Ps back to the daily 21, close enough, right? We got the QQQ back to the daily 21. Got the semiconductors, not quite there just yet, but names like Nvidia are right there at 21. Names like AMD, right at the 21. Names like Roblox, daily squeeze, daily 21 EMA. A few more names here. The thing we got to wait for are the pretty colors. So for that trade we had in Coinbase, the trade we had in Zoom, QQQ, it's not enough to be above that daily 21. We need those buy signals on the lower time frames. So for Roblox on the big three, good little trend, good structure, holds good support. We got the daily squeeze, but we don't have any buy signals. We don't have that moment in time just yet where trend structure momentum says, hey guys, we're gearing up for a push here. So it's kind of tough to jump in here with any edge. Nothing telling me to get long, nothing telling me to get short. Just a bunch of neutral signals here telling me to be patient and wait for the pretty colors. So I'm keeping a very close eye on Roblox, waiting for some buy signals. Definitely keeping a close eye here on Nvidia. Into today, into tomorrow, Friday, we hold that daily 21. We get a couple 5-minute, 15-minute squeezes, couple of buy signals. That can take you right back towards 185. But we need the buy signals. We need the buy signals. Right? AMD, same dynamic. I want to play this push, and then I want to get the hell out of there before the pullback. Then we get the reversion to the mean. Now we watch AMD closely. We're waiting for a couple 5-minute, 15-minute, 30-minute squeezes, and then we're waiting on some buy signals. So the major thing to watch before this trade could line up is just going to be your S&Ps and your QQQ. As goes the market, goes the stocks. So come Thursday, Friday, if the S&Ps are giving us that dynamic, couple lower time frame squeezes, couple lower time frame buy signals, that could trigger the move in the S&Ps, which most likely triggers the move everywhere else. So that's a watch list for now, guys. Couple of semis, the QQQ, the S&Ps. I gotta like Roblox here, especially considering how good it holds up. With a little bit of a flush there in the market yesterday, but we're neutral. I don't have any edge. Gotta wait for that edge. Eli Lilly is a good example of, okay, we have the structure. We're on top of that daily 21, but we got a little bit of edge here. We got some pretty colors. 30-minute squeeze with the buy signal, right? Bright green. And you got the buy signal on the 15-minute chart. So basically waiting for this exact moment in time in the S&Ps, in the QQQs, the AMDs, the NVIDIAs, etc. On top of that daily mean, pretty little squeeze, pretty little buy signal. That's the good stuff. That can trigger the push you're looking for. So Eli Lilly, one of the few examples of things that have that dynamic right now. We've got plenty that have a few pieces of the puzzle. We don't have the most important piece of the puzzle, which is the big three buy signal. UMP is another example. Really good structure. Holds that daily 21. Cancels out every single sell signal. So full transition from bearish to neutral. Histogram goes positive. Yeah, this looks pretty good. But not the best chance of us getting that big rip towards 223 until we got a couple of buy signals. Got to keep in mind, guys, we're not in an uptrend. We get back to a market like 2020 or 2021, we can get away with trading B plus kind of stuff. We can get away with, all right, here's UMP. It's neutral, but we can jump in anyway because the market's just so strong. We're not in that market right now. What's going to trigger that directional push, even if it lasts for 2 to 3 days, is going to be a buy signal on a lower time frame. We'll take them wherever we can get them, but we're not going to be taking trades without the pretty colors to follow. So, a couple of examples there, guys. Healthcare. Healthcare looks pretty solid here. There's the structure. You're on top of the launching pad. We got a daily squeeze, 30-minute, 15-minute buy signal. So the question is, can those lower time frames wake up enough? Can they get that party going up towards +2 on the daily? So I think you want to spend a few minutes today looking at healthcare names. We checked out Eli Lilly, UNH here. A little bit extended, but UNH not too shabby. Johnson & Johnson, we have no interest because that's not pretty enough. And Pfizer here is pretty solid. Daily squeeze on top of the launching pad, 2 hour, 1 hour, 30-minute, 15-minute buy signal. So if we have that dynamic, that's where I got a bit more confidence. Yeah, this might trigger a push towards +2. I can't have the same confidence just yet in something like Roblox. Nothing telling me here the path of least resistance is to the upside. Nothing telling me in the S&Ps if the path of least resistance is to the upside or the downside. So the Lilly Bells, the Pfizers of the world, got a little bit, guys, what we're looking for here. And then as far as open trades on our end, we got Oxy and then we got XLE. So Oxy, one of those things where you open up looking really good. You get about within $1 of your target. We're looking for 67. Then you get caught up in the volatility of the market. So pretty close, but no cigar. But we held on to the trade there. It did go back to neutral, which isn't necessarily a huge problem. What's a huge problem here is if Oxy starts to trade under that daily 21 EMA. So what I'm looking for is that same dynamic. Hold that 21 EMA. Let's get some buy signals again. Let's get that push towards 67. And then we got basically, guys, the same trade over in XLE. Off to a pretty good start yesterday. Gets caught up in the market. Goes back to neutral. But you hold that daily 21 EMA. Right, so there is the difference, right? There is a difference between getting long Tesla right here and then getting long Tesla up here. Unless you're looking for like a really above average move, right? You start to wander off the path of probabilities. It's tough to take the entry up here. Right? You might have a little bit of reward, but even if it pulls all the way back to the 21, still holds good structure. Huge difference in something like XLE. Take your entry right at that daily 21. With the close under the daily 21 EMA, you take your exit. So on this trade, if we get out around $72, we're going to lose about $80 per contract. If we can catch the push towards 78, we'll make about $300 per contract. So that's where you can work that ideal risk reward. You take your entry, you don't quite get the rally you're looking for, you cut that loose under the daily 21. Right? You take your paper cut. If you can nail that push, you're going to get yourself a good return. So that is what we're rocking with for now, guys. Just keep in mind, right? We're going to hear from the Fed today. So shall not be dull. We'll see what JP's got up his sleeves, and then tomorrow we're going to get the GDP report, and then of course you got Apple earnings, Amazon earnings, and then a few more big earnings as the weeks go by. But that's what I'm seeing for now, guys. The ebbs and flows of the market. Even if we're going to trend all the way until August, September, it's never going to be in a straight shot. We're going to get these big rips. We're going to squeeze the shorts. In the process, you're kind of roping everybody into buying some calls here. We got to get these flushes along the way. Right? If we're going to trend until September for conversation's sake, this is what it's going to look like most likely. Big push, reversion to the mean, big push, reversion to the mean, so on and so on. Up to this point, we haven't seen any of that. Back above the 21 totally fails. Back above the 21 totally fails. Back above that 21 totally fails. we learn a lot about our market on these dips, on these pullbacks. If these dips start to find support and hold structure, all kind of points towards a bit more upside, guys. Back under 21 EMA, I think we want to avoid being long anything. So be patient, be disciplined. Again, Amazon's going to be Thursday night, and they tell me that's a pretty big one. And then I believe Apple is Thursday as well. Yeah, Apple on Thursday. So shall not be dull. But there's a few things for you guys to keep an eye on here heading into today's session. I've got to be in the options room in about 15 minutes, so we'll hang out for a little bit, jump in the chat here, answer some questions, and if you got any charts you want to take a quick look at, let me know and we'll rifle through them. Good morning, Beverly, Jared, Terry, Mike, Janice. Good to see you guys. Good to see you guys. Yeah, Beverly. Admittedly for me, Beverly, it's a bit of a change in my own trading. I kind of came up as a trader. I really cut my teeth, so to say. I'm just taking these trades off of weekly charts and daily charts. And of course, you look at the last 10 years ago, we've kind of been in a market where that works pretty well. The realization I had, though, guys, was, the market's changed here, right? There's a general statement this year, outside of energy, outside of natural gas, not too many bullish trends. But for me, it was kind of the realization where it's like, okay, that my favorite trade in the world, find a trend, find a daily squeeze, get along at the 21 EMA, take profits at +2, +3. Kind of the realization that trade doesn't really have too much to do with the time frame. It's a bit more about the criteria. Something's coming together here to give us a really good probability shot at catching that push towards +2, +3. Granted, we're not in the market anymore where that's all over the place on these weekly charts and these daily charts. Really not too many examples. But we are in a market where that same moment in time, where trend, structure, momentum comes together in a squeeze to give you a really good shot at catching that push. We're in a market, guys, where it's all over the place on those lower time frames. To pop the hood a little bit, you'll start to see them left and right. So this 30-minute squeeze here in Costco, it's the same exact trade. It's a lower time frame, which means the trade works or doesn't work usually a little bit quicker than a weekly chart or a daily chart will unfold. But trend, structure, momentum, the squeeze, the entry, the exit, it's all the same dynamic. Like, to me, that's been the biggest blessing here with the big 3 indicator. I'm just focusing on my trade without such a focus on, well, what's the time frame, right? I only trade daily charts. All right, well, cool. If you do that in 2020, then you're just fine. If you're trying to get bullish in this market off the daily charts, it's a bit of a tough endeavor. But every week, left and right, running these scans here, we have that moment in time on these lower time frames. So if you look at all my recent trades, guys, they're the same exact thing. Squeeze plus a buy signal. Entry at the 21 EMA, taking profits on the push. Different time frames. 15-minute there in coin. We're even taking the 5 minutes, the 30 minutes, but very similar execution, very similar principles. We'll get back to a market, of course, where it's all over the daily charts, it's all over the weekly charts. We're taking more of those 30 to 45 day till expiration swings. For now, it's a bit more of a market where crank it down to a lower time frame. You got some beauties out there. But of course, trade them accordingly. Like Cisco's a great example here. No bullish trend, right? No daily buy signals. There's nothing really going on here. But if you know where to look, which is right on top of that daily 21, and then you know what to look for, which for me is just that combo, squeeze plus a buy signal, you can get in at the 21, take your profits on +2, move it on to the next one. So yeah, Beverly, it's been a big change for me, but very, very enjoyable. Very enjoyable. Hey, Hugo, good morning. Hugo, I got a buddy with the last name Fournier. Maybe you guys are related. So Dollar General here. Dollar General. Yeah, for me at this point. So keep in mind, guys, and I'm trying to push the team to kind of get it moving here. We should have the new update for the indicator live. We should. Fingers crossed they kind of got a flame up under their behind and got the update posted. But with the update, what's interesting is we never had the daily buy signal in Dollar General. So with the previous version of the big three, we had a buy signal on Friday, I believe. With the update, which kind of tightens up all the criteria, no more buy signal. So always trying to make these these signals better and better. But yeah, Hugo, great question. For sake of conversation, let's just say there were daily buy signals. For me, the reasoning to get into that trade would be we have a daily squeeze, we're above that launching pad, and we have some buy signals. It's no longer that same setup. Only thing that we still have is the daily squeeze. But now we're under the 21 EMA. We're underneath the launching pad, which already kind of shifts the dynamics here of that rocket taking liftoff in this direction versus that direction, and no buy signals. 30-minute, 15-minute sell signal. So if I had a position here, yeah, today I'd say Dollar General, you got to prove yourself. If you want to keep my cash, right, if I'm going to keep my cash in Dollar General versus something that might be a bit more deserving, right, like an Eli Lilly, for example, then today Dollar General's really got to prove itself. To me, that means get your booty back above that daily 21. Let's get rid of all this nasty on the 30-minute, 15-minute. And then I want to see some buy signals coming on in. Right? Never the easiest thing to do, guys. Never the easiest thing to do. And now Pepsi's looking pretty good. But a good example is like a couple of weeks ago, we jumped into this 2-hour squeeze here in Pepsi because we had the buy signals. 2-3 days go by, no more buy signals. We cut that loose. We took our paper cut, and then I think like immediately the same exact day, we jumped into the 30-minute chart in Cisco, took a nice little base hit out of it. Now, this is going to happen plenty, right? Jump into Pepsi with the buy signal, goes from bullish to neutral. You cut bait, right, to move on to a prettier chart, and then it kind of turns a corner and wakes back up. That's going to happen left and right. I can live with that. What I can't live with, I continue to hold something that no longer has the buy signal, and then I get caught up in something like this. Like, that's the worst. When UNG loses that buy signal right there, that's at least when I got to say to myself, all right, I'm making the conscious decision to hold something that no longer fits the bill, right? No longer meets all my criteria. Because of the market that we're in, guys, it's not like something loses a buy signal and just kind of sits there. It's a bit more like a BMY. Looking good, buy signals coming in. You lose the buy signals, it all kind of goes to crap. The reality is, when we make that decision to cut the trade, we don't really know what's going to happen next. Like, no way of telling right now whether Dollar General shakes you out and then rallies to 260, or if Dollar General totally falls apart here. So never easy decisions for traders, but I think what makes it easier is we want to be really clear about why did I take this trade to begin with? What was my ABCD for taking this trade? If ABCD is no longer there, you've really got to take consideration of cutting that trade loose and then taking that capital and putting it into something that's got all the pretty colors. Awesome question. Awesome question. Jared, yeah, we got a lot. That's the nice thing about a pullback. Now that pullback sucks. I've been there before. This pullback that we saw the last few days like really sucks. If we're loading up on calls up here, all kind of comes down to discipline and patience, guys. Right? There's the FOMO, there's the euphoria. this market is squeezing the shorts. We're going to keep on rallying, right? All that hoorah. We got to think in terms of probabilities. Not a guarantee, not a promise, but a really strong growing probability that after we make that big rip towards +2 on a daily, eventually we're going to come back down to earth. Also think, guys, in terms of options pricing. You come jumping in here last week after we've rallied for 1, 2, 3, 4, 5, 6 days. Those calls are all kinds of overpriced, right? All kinds of bogus premium getting pumped in. Those calls are basically inflated. You buy them up here at $5, that normal pullback to the 21 EMA. Now those calls are going for $1. Right? The smart money is going to buy it down here for $1, flip it up here to the impatient, flip it to the chasers up there at $5. So even from an options pricing standpoint, as long as these dips hold support, they're a total gift. Because now you're buying those calls here after they've gotten creamed. Right? All that premium just got sucked right out. So now we can buy them and take advantage of that explosion on the way up. So as long as it holds, guys, the pullback a lot of times is a gift. Is a gift, right? Like Disney, ebbs and flows. Find your signal down here. You're getting those calls when it's cheap, right? You're selling those put credit spreads before those puts get creamed. You're taking that profit into the strength. Let everybody else chase it. Okay? You buy your calls at $2. You sell it to them at $4. Then you come back and buy them again at 2. So yeah, Disney coming on in here. We got Moderna. Right, pretty good hold of the 21, neutral for now. And then Square here, excuse me. Yeah, Square broke. So Square is one I look at and say, I can't take that bullish trade until we're back above that daily 21. That's how we avoid getting into trouble. Good stuff there, Jared. My man Brent B. Thoughts on LFUS? Ooh, a nice call out here. Nice call out. So, not extended up there at +2. Not directly on top of the 21. We're kind of in the middle here. But we got a couple of green beans. 1 hour squeeze with the buy signal. Like, really solid, actually. And we got the 2-piece combo. 1 hour and the 30-minute. Yeah, very clean. Very clean. Just understand the dynamic in terms of risk reward changes a little bit with an entry back here versus an entry back there. And we're all looking for different moves, of course, but here's my perspective. Even if I'm taking my entry based on the 15-minute or the 5-minute or the 30-minute chart, this is the move I'm trying to participate in, right? From the 21 EMA all the way up to +2. And ideally, I want to take my exits under the 21 EMA. So if we measure our risk reward in terms of average true range moves, taking that entry back here at the 21 EMA, you don't even risk an average true range move to the downside. You don't have to actually sit until the flush to about 240. You can just cut your trade loose on the close back under the 21. So for conversation's sake, maybe your risk is -1 ATR, but your reward is 2 average true range moves to the upside, risking less than 1 to make 2, right? In terms of average true range moves. Now, if we take our entry up here, and if we're still looking for a push towards +2, now the reward is 1 average true range move in our favor. But if we're going to take an exit under that daily 21, now our risk is just about the same, if not a little bit bigger. So if you measure your risk reward in terms of average true range moves against you and in your favor, you really put things in your favor with the entry back here. You're risking less than 1 to make 1, 2. Where up here, it's all a bit more 1-to-1, maybe a little bit worse. So really good setup, though. Just things to keep in mind. But your 1 hour, your 30-minute, they look great. They're looking good. Thoughts on ExxonMobil? Keep in mind, these energy stocks, they got earnings coming up as well. But there's a dynamic I'm looking for. Back above the daily 21, daily squeeze, and the moment in time on the 30-minute chart. Right? 30-minute squeeze with a buy signal. So I would look to jump in here, take my exit under the daily 21, and as far as the potential profit target, we're looking for a push towards 95 and change. So yeah, I think Exxon looks pretty good. Looking pretty good. See how energy does here today. Good morning, Anil. Thoughts on Shopify? Did they announce this morning? I think they do before the open, right? Yeah, they did. Got my days right here. Yeah, 7:27 before market open. Where are we gonna open here? 31 and change. Pretty quiet open actually for Shopify. So kind of a tough read. We'll see where it opens up. Just an observation here. No daily sell signal. Not too many sell signals at all. But I'm pointing out the daily because if we can, if we find something, guys, it's kind of hanging out down here near -2, but there's no daily sell signal, that kind of tells me the bears don't really have control. Yeah, ugly gap down, ugly move, but trend structure momentum aren't necessarily pointing towards, your path of least resistance is to the downside. So of course we're going to see where it opens today, but I've been seeing a lot of that lately. Google's been a good example a few times. Get a big flush. We're down here at -2, but there's no daily sell signal. Kind of points towards potentially you're a little bit oversold, but the bears don't actually have control. That kind of makes for a nice little snapback rally. Like Roku, another example. -2, no sell signal, nice pop. -2, no sell signal, nice pop. So in other words, I would be careful shorting things that are down here near -2 without a bunch of signals telling me, yeah, it's a great idea to get short. So we'll see how Shop holds up here today. All right, guys, a couple more. Then I got to jump into the gold room. KK wants to look at Cat. So Cat's a little bit early, which I prefer to be earlier as opposed to later. But what I would want to see is just one convincing close back above that 21 EMA. And then for now, we got the combo on the 30-minute chart. I do prefer we get that back above that 21. Just one good close back above that 21 on the daily before we jump in for a bullish trade. But the 30-minute chart looks pretty good here. Looking pretty good. But all right, guys, I got to be in the gold room in like 20 seconds. Got to cut you loose here. But I hope you all found this helpful. For those of you that did the class on Saturday, we got the next live trading session tomorrow, and then we'll start doing our Thursday evening get-togethers. For the rest of you, I hope you have a great day. Trade safe, be patient. Remember, we got JP and the Fed this afternoon, and then some pretty big earnings over the next few days. So be cautious, guys. Be disciplined, and I'll talk to you soon. Thanks for your time.